Did car dealers drive inflation? Research published in the Bureau of Labor Statistics Journal suggests they were at the very least riding shotgun. Economist Michael Havlin wrote that paper, and he joins us now. Michael, good to see you. Before we dive into that research, how would you describe how the business model of car dealers changed during the pandemic?
Right. Happy to be here and great question. So in the preceding economic expansion that lasted from about 2009 to about 2019, dealers innovated to a great extent to weather a prior margin compression. So over that 10-year period, dealerships were faced with margin compression, and they responded to that by expanding their sales of financial and insurance products. What happened during the pandemic really inverted those competitive dynamics. So due to supply chain constraints and due to economic stimulus, inventories for new vehicles essentially collapsed in 2020 and 2021. And that allowed dealerships to mark up new vehicles substantially. And markups tripled over the 2-year period. And so their business models, while they didn't do anything new, because inventories were so low, they commanded a great deal more pricing power during the pandemic.
Michael, how big of a driver was that to inflation? We know that car prices obviously contribute to it, but to what extent did you find in your research?
Right. So the range of estimates that I provide in my research is from about 35% to about 62% of new vehicle inflation was due to profit increases specifically at dealerships. And I look at that range and I say about half. So about half of all new vehicle inflation was due to profit increases at dealerships. And that accumulates into a significant impact on the overall CPI as well.
So I reached out to the National Automobilers Association about this story. Here's what they told me. The argument that dealers, as retailers of commodities with negotiable prices that were severely constrained during and after the pandemic, contributed at all, let alone substantially, to inflation is absurd. What's your reaction to that, Michael?
Well, I'd say the proof is in the pudding, and I understand that the Automobile Dealers Association is just doing its job, which is representing the dealerships. But I'd like to step back and just mention, no one is blaming dealerships for what happened, or some people are, but I am certainly not blaming dealerships for what happened, and my research is not blaming dealerships for what happened regarding inflation. Dealerships are simply acting rationally to the incentives that were in front of them, and that's how our market-based system works. I think when people look to blame certain actors in the supply chain, what they're doing is trying to understand why something occurred and understand how we may be able to prevent it in the future. So to understand why dealerships had such pricing power, we have to kind of step back a little bit and look at what happened to inventories. We had this thing called the pandemic. At one point in March of 2020, factory output fell by 99% in 1 month. When do you see something like that? A virtual 100% drop in 1 month. And there was a ongoing 3 to 5 month deficit of automotive production that the industry never really overcame. And to this day, unfilled orders are 20% higher than they were pre-pandemic. And dealerships get pricing power when inventories are low. Now, what happened later on in the pandemic, I think, is a little bit more interesting. We know what happens with shutdowns. We know what happened with supply chain constraints. But later on in the pandemic, later into 21, 22, automotive manufacturers, and you can see this in any media reporting, began openly discussing the fact that they would like to remain disciplined. And the manufacturers and the dealerships don't want to go back to the high inventories of the prior decade. So the only way that dealerships' pricing power is going to diminish, the only way those margins are going to go down, is if either A, production from the manufacturers increases, or B, consumer demand decreases. And so far, we haven't seen enough of either of those for dealerships' pricing power to diminish.
Michael, are we starting to see that change, though, a little bit? Because the latest data out that we've gotten from Kelley Blue Book showed that new vehicles, the average transaction price did fall on a month-over-month basis. Is that just a one-off, or have we started to see maybe that cycle shift a bit?
Yeah, that's right. There has been some softening in automotive vehicle prices as well as margins. And the logic certainly follows that if profit increases drove vehicle inflation, then certainly profit decreases can cause deflation or at least disinflation. However, to really get that in a sustainable and measurable way, margins have to come down a lot. They've only come down marginally, and they're still double what they were pre-pandemic.
All right, Michael Havlin, economist, thanks so much for joining the program here this afternoon.